This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. What is up, everybody? Welcome back to another episode of Benzinga Live. It's Tuesday. Please drop the stocks, trades, cryptos you are watching in the chat. We'll start, of course, doing a quick rundown on the big companies reporting earnings today. That will be Microsoft and Google. I see Risk It for the Biscuit in the chat saying fly high GameStop. It seems like it's been a while since we've been able to say that. GameStop up more than 10%, up 11% on the day, and it keeps moving higher. I started watching it about 15 minutes ago, taking a nice little move up since then. We will be talking about some GameStop today. SPY, Richard's asking. All right, we can check out SPY. Why not? As well as some other big headlines. We have a big interview at noon. No Dave Green today, like we usually have on Tuesdays. Unfortunately, he's a little busy. But we're still gonna have a great show here. All right, let's go ahead and pull up our Benzinga Pro. If you have not already, free 2-week trial, no credit card needed, your one-stop shop. Everything you need for trading. We've got our advanced news feed, charts, screeners, movers, you name it. Unusual options, all here on Benzinga Pro. Again, free 2-week trial in the description. Link is in the description. No credit card needed. Let's start with SPY real quick. That'll give us a good idea of what's going on in the overall market today. Let's go to a 10-minute chart on the SPY. You can see here, we've just been edging higher kind of the past hour or so, but really off that open at about 940. Big move up. From a technical standpoint, we talked about the chart yesterday that we needed to clear this level. Well, guess what? Now we did. We did clear this level. So now we cleared this level. I mean, I'm not, saying it's time to go long. This isn't a financial investment advice. I'll be open. I don't think that great at reading charts, but I do know we've got a little bit of resistance here. If we can take that out at about 390, it looks like we've got room to run till there. I've been more, if you guys watch this show regularly, I've been more bullish than bearish the past, couple months or so. Even as sentiment was dropping, really that was my sign that maybe I should be getting more long, is when retail sentiment kept dropping to new 1-year lows. And we can go check that out, what's going on. Actually, let's do that right now real quick. Just go over to the AAII, American Association of Individual Investors survey. So we're still, this was the 1-year high in terms of bears, 60.9% back in September. So we're about a month away from that. But it's not really that much of a significant difference. The fact that, 56%. The fact is there's more than double bears out there than bulls. Double the amount of bulls would be 45.2%. We're at 56%, so there's still way more bears than bulls out there on the retail side. That's getting me interested. I put in a call option this morning on SPY. Well, if you're up on it, maybe you can take some profits. I don't know if you need the money, if you were doing it as more of a bet, just letting it run. It all depends on your time frame. If I'm buying options, if I'm buying call or put options, typically it's with money that I wouldn't mind losing anyway. BBBY, haven't checked this one out today. Bed Bath, oh wow. Bed Bath & Beyond up 24% today. Did you see this, Randy? Randy said everything's up 20% today. Are all the shit stocks up like that much? How's Upstart doing? Let's check Upstart. I bet Upstart's up. Yep, 11%. Damn. I've been saying out of all the stocks that look like this chart right here, like that look like Upstart, that basically just went parabolic up at the end of 2021 and have come crashing down. Upstart is one that I actually wouldn't mind owning. Like, especially maybe for long term, because I think compared to all those other companies from a financial standpoint, Upstart was one that's actually making money. You know, we can say what you want about the business model as far as, you know, just being personal loans, all this stuff, sure. But if you go over to the financials, let's go to the income statement. Let's look at it over an annual basis, because I want to see here is just the annual growth in revenue. So from 2018, 95 mil in revenue, 2019, 162, 2020, 222, 2021, 846. I don't expect that type of growth, you know, I don't think they're going to 4x their revenue like year over year, and that growth will probably slow down. But even, whoa, I didn't mean to do that. Take COVID year outliers out, you can still see this, that it was on a good revenue growth trend from 95 mil in 2018 to 845 mil here. Again, I don't expect that to continue. So obviously you have the potential for a value trap. But I mean, price to sales less than 2, PE forward less than 13 for a growth company. I don't think this company is done growing. Asan, I haven't checked out Asan in a while. 21 bucks, up 9% today. I mean, yeah, for all these growthy stocks, it's a great day. I bet Rivian's having a good day. It seems like the Wall Street bets, meme stocks, if you will, are really the ones that are outperforming today. GameStop, how's AMC doing? I mean, even with AMC up 10% today, it's right where it was at, like, the beginning of October. I mean, I'm not really interested in these names. Here's my thing is right now, again, it all depends on your time horizon. If you're looking to just trade something and you think, you know, some of these meme names have legs to run, sure. But I wouldn't buy any of these stocks outside of just a trade that you're, you know, if you're not willing to get in and out of them, I don't know. Speaking of trades, I want to check my Robinhood account. I don't know if I have any money in there. Yeah, I do have a little bit. Should we buy a put somewhere, maybe? I don't know. Do these names have legs to run? What about how's Microsoft looking today? Microsoft's edging higher, up about 1% on the day. Of course, Microsoft gets ready to report earnings this afternoon. It could be interesting in terms of what the report means for, and we have Google as well, which will be big for other players that have exposure to advertising. You know, if okay, so Meta reports tomorrow. Meta reports tomorrow. I sell calls on GME to degenerates from Wall Street bets. Best investment ever. Do you actually do that, Urban Farms Project? It's probably a very smart. So walk me through, and I'm curious this because I've never like just sold calls outright like that. So if you're selling calls, you're selling the right to buy. So do you have to have the shares? Do you have to have a certain amount of money in your account to do that for collateral? Or how does that work? Like, here, let me see it. I'm going to go to my Robinhood real quick and just go to GameStop. Go to trade options, sell call. I can sell this $30 call for, see, that's not even that much anymore. Yeah, okay, so you do need 100 shares. Covered calls and CSPs. Okay. If you have the stock, it's a covered call. Okay, so you have to own 100 shares. Got it. Remember yesterday we discussed that wheel strategy a little bit where you can sell puts on a name that you wouldn't mind owning at that specific price. And again, kind of the same thing. You need to have a much collateral. You need to have a much enough in your account to pay for that if it happens. One thing, this is just kind of a fun little story actually that I wrote about that we have an article up on. So every time dating back to really, 1900, every time a Philadelphia baseball team has won the World Series, there's been a severe market crash and recession. Okay, Urban Farm's saying he's going to sell a $32 call 3 weeks out. So how much? I can check right now on GameStop. So if we're looking at let's just say November monthlies to make it easy, a month out, $32 calls. Yeah, you can sell it for $1.71. Every time a Philadelphia baseball team has won the World Series, there has been a significant stock market crash and recession, either that has already started when the team won the World Series or that kind of started right after. So we'll go through this real quick. Again, not making any claims. There's no takeaways. I discussed this in the article, but just some fun little thing people were pointing out. It is that time of the year, end of October, getting to the Fall Classic. We actually have a couple different. We talked about the other baseball story yesterday, the Mattress Mac one. But okay, looking at it in 19. All right, let's start from the top. We'll do a little group reading here, helping out my numbers on the articles. All right. So the Astros, a lot of people hate the Astros after the team got caught cheating in 2019. But I say maybe, just maybe, the Astros are who we should all be rooting for in this year's Fall Classic. Dating back to the early 20th century, every single time a Philadelphia baseball team wins the World Series, a severe economic downturn follows. Let's start with the first example. The Philadelphia Athletics 2019 World Series title. So the Athletics, the same Athletics that now play in Oakland, originally played in Philadelphia from 1901 to 1954. The team then moved to Kansas City before finding its eventual and current home. The Athletics defeated the Chicago Cubs 4-1 in the best-of-7 series in October 1929. Specifically, the Fall Classic concluded on October 14th when the Athletics scored 3 runs in the bottom of the ninth in comeback fashion to defeat the Cubs. So I was actually researching this series. What was interesting to me, and it makes sense, like they were playing this game during the day at like noon. I can't imagine like a World Series Game 5 clinching game just taking place during the day on like a Thursday, Exactly 10 days later, the Great Depression stock market crash began. Stocks dropped more than 10% at the bell on October 24th. Black Tuesday, a day which the Dow dropped more than 12%, was 5 days later on October 29th. So within 2 weeks of the Phillies winning the World Series in 1929, the market had, gone through the biggest part of the Great Depression crash. Then in 1980, the Phillies, who, again, I didn't really know this. I was researching so Philadelphia actually had 2 baseball teams there for a while, the Athletics and the Phillies. The Phillies had been playing there since like before the 1900s and just had always been historically bad. Had been there 97 years before they won their first World Series in 1980. Steve Carlton, Cy Young, and Mike Schmidt, MVP, ended up beating the Kansas City Royals. And at that point, going into the World Series in the fall of 1980, there had already been kind of some cracks forming in the economy. But the real market had not crashed yet. You know, the market wasn't doing well, but it only got worse. Actually, the chart looks the chart around that time for the market, like just for the Dow, looks really ugly. It like topped out in 1965 or something, and was basically in a bear market for like 15 years. Or maybe it wasn't in a bear market for 15 years, but it never got back to those highs for a while. And the market wouldn't end up bottoming until 1982. So it's not like, even though there were already some cracks forming before the series and the market wasn't doing well, that it was a good time to buy. Because if you bought when the Phillies won in 1980, the market still had, you know, another 2 years before it bottomed. Our most recent example, so the first Philly title came right around the Great Depression. The most recent came during the Great Recession. Like the 1980 title, cracks had already been forming in the economy when the Phils won in 2008, but the economic and market weakness would continue from when the Phils won in 2008 World Series in October. The stock market didn't bottom until a few months later, March 6, 2009. So in hindsight, if you would have bought in October 2008, stocks fell hard for the next like 3-4 months, like another 20%, I want to say. But after that, you were in the green within a few months. You just had to withhold through some turbulence. So when it was all said and done, if you had a long-term outlook, October 2008 was actually a pretty decent time to add. Again, you would have had to sit on some losses for a little bit, but again, depending on your time horizon. So we only have a sample size of 3. Shouldn't really be worried. Correlation does not equal causation, but every single time dating back to the 1900s, we've had, or the early 1900s, every time a Philadelphia baseball team wins the World Series, there's been a big market crash. So maybe we root for Houston. Bitcoin to 100K by Thanksgiving, big money loading for the first time in a year. I mean, we can talk about Bitcoin. I'm down to do that. Wait, 100K by Thanksgiving? Like in a month? I'll bet that doesn't happen. That'd be crazy. I wonder what Coinbase's stock would do if that happened. I bet you it would like quintuple. How's Coinbase's stock doing, by the way? Oh, 73. It's higher than I thought it would be. Coinbase's stock really found a bottom. Like it crashed and crashed hard and found a bottom there, kind of around like 45, and it's been doing well since then. Look at Tesla doing well. How's Bitcoin doing on the day, by the way? Bitcoin just pushing higher. Tesla having a great day. Let's go ahead and pull up Tesla's chart. I have that stupid commercial from that, or that stupid song from that car commercial stuck in my head. Wait, what stock was I gonna pull up first on Benzinga Pro before Tesla? Oh, I was gonna pull up Bitcoin. Maybe in 3 Thanksgivings from now. Yeah, I mean, Bitcoin to 100. Can you buy call options on Bitcoin? I think you can on some exchanges. Wow, it's cool how we have the. Is this volume of like the actual? What is this the volume of actual Bitcoin traded? I don't know. I mean, honestly, from a chart perspective, it does kind of look juicy. Like that Bitcoin's finding some consolidation, bottoming out. Like, I don't know what the fundamentals are for Bitcoin, but whatever. It sounds like maybe some value investors are coming in right at 19K. It doesn't look like this thing is dropping in much lower than where it's at now. We did get, where did we get up to on this little run up to in mid-August? 25. We just entered a liquidity crisis with this rally. Our market could not handle the SPY at 3,900. Fundamentals are strong, way oversold. I don't know. I don't know how the market going up makes a liquidity crisis. I don't really know, but I don't know. I'm positioned long right now, so I hope the SPY keeps going up. I know a lot of people are still short, but to me, like the risk reward for being short right now is just not there. I forget who it was. I was reading a post from someone yesterday who was talking about how essentially just there's been so many different headwinds in terms of the war, inflation, supply chain, energy in Europe, all these things. And a lot of them are connected, right? Like inflation and the war, energy in Europe and the war. But there's just been so many things for the market to focus on that it's kind of been hard to like hone in on the actual issues at hand. Where are things getting better? Where are things getting worse? But my thing with why I don't think there's as much reward alpha and playing the downside here is the market's we've already made the big move, right? I mean, a 25% move in the S&P 500 isn't nothing. What we saw from our highs in January 2022 to our lows a couple weeks ago is a very, very big move. One that, shows that the market is pricing in some of these things. And then as I said, like there's been a lot of different things. It's been hard to kind of keep track of are things getting better? Are things getting worse? Notice, and I've made this point before, how the bear case has been shifting. At one point it was all about inflation in the US, and it's about, okay, the consumer demand's about to crash. Then it's about, okay, the earnings crunch is about to happen. We've seen the valuations get hit. Now it's time to see the earnings get crushed. For a little bit, it was about the energy crisis in Europe. They're not going to be able to make it through winter, all of these things. I don't have really a strong bull case, to be honest. My more bull case is just that I think a lot of these things are priced in. All clear back to 4,300? No, I never, I didn't say that. The size of puts put at 3,900 and 4,000 will break Wall Street. See, I don't know, because as price changes, sentiment changes. So if SPY keeps going up from here, and we can go to a smaller or a 5-minute chart if you want, as SPY keeps going up, like if we take out, some more levels here and there, like next thing you know, people that were bearish might flip and now they're bullish. People might switch their positions to cover their shorts. Like, I don't think if the SPY gets up to 3,900, that means we're all in trouble. This is the Trump rally. I mean, that will be interesting, honestly, to see how the market reacts to the midterm elections, specifically like different sectors. Like, I wonder if like iClean and like clean energy stocks would get hit if Republicans win control of the Senate and the House. I don't know if that would then give them enough power to like strip certain parts from Biden's Inflation Reduction Act. Long-term GME and AMC real liquidity crisis. How's AMC and GME doing? Pretty much hanging out since we almost exactly where we started the show at. Who are the big movers? We say Upstart. No, who was up 20%? Who was it? Bed Bath & Beyond. Yeah, Bed Bath & Beyond still up 25%. It's a seasonal rally, that's for sure. I don't know. There's a lot of different things, right? We could equate the rally to. We could say, okay, finally, maybe the Fed is catching on that there are some signs that inflation is starting to cool off. Maybe it's the fact that earnings have been so far better than expected, whether you're looking at companies like JP Morgan or different companies in the tech sector. You could say you have some potential headway on a diplomatic solution in Russia and Ukraine that looks like a potential exit ramp for the war. There's a lot of different catalysts here that you could attribute the rally to. I don't know if it's anything more than just the fact that we've been oversold and that it's a little relief rally. I don't know. Fed is not speaking this week, so they can't manipulate the market. Yeah, I don't know. We've seen the Fed just be able to have these crazy influence on like intraday movements in the markets the past few weeks as different Fed officials have spoken. We can go ahead and go over here to our CME watch tool and see what CME has given us our odds. Probably, I'm going to guess, still pretty damn high for 75 basis points at the next FOMC here in 8 days. So what will that be? Next Wednesday? Next Thursday? Next Wednesday or Thursday. Yeah, 95% chance we're getting 75 beeps. Could be interesting. No one is cashing out their puts yet, and it's going into the I don't know. I think a lot of people have already been kind of forced to cover shorts over the past like week or so, or if not forced, willingly. Because like, think about it. There's only so much alpha in every trade. If you're just short the overall market, the market goes down 25%, or maybe you weren't short the market goes down 25%, which is what's happened over the past 10 months. And then starts to show signs of potentially bottoming out. I'm not going to say that. You're not going to be like, all right, now the next big leg's coming down now, right? Like, chances are that move's already happened. 25% move to the downside. I think the put to call ratio has actually been going lower over the past few weeks. Let me find that out real quick. Put to call ratio chart. I want to see a chart. Here we go. Yeah, see the put to call ratio has been dropping. So exactly your point, whoever that was in the chat, no one is cashing out their puts. It looks like people are. On September 23, the put to call ratio was 1.02. There were more puts than calls out there. Now that number's dropped to, oh my God. That number's dropped a lot. We can go to like a 10. Oh man, we don't have access to all the data. Yeah, you can see here on the 3-year chart, we had a huge spike up COVID 2020, March 2020, a big spike up a couple weeks ago. And now we're kind of normalizing, getting back down to more normal levels. You forced me to move my December puts tomorrow. I'm not trying to force anyone to do anything. And remember, none of this is investment advice. Someone get that little disclaimer going up there, so I can't get in any trouble. There we go. All content is for informational purposes and not to be used as investment advice. All right, guys. I do see our first guest hanging out backstage. We've got Kyle Floyd, the CEO of Vox Royalty. Excited to talk to Kyle about a recent uplisting, some other updates. So whenever Kyle gives me a thumbs up and a sign that he's ready to go, we'll go ahead and give him the very special Zinger welcome and bring him on the show. Let's go. Kyle's ready. Any guests say Deuce Parker? I just answered your question. All right, let's go ahead and give Kyle that warm welcome and bring him on the show. Kyle, welcome to Benzinga Live.
Aaron, thanks. A pleasure to be with you.
Yeah, so before we get started, you want to go ahead and give our audience just a quick rundown of what it is that Vox Royalty does, what it is you guys do?
Sure. We're really excited about where our company sits in the present macroeconomic backdrop. So just for the audience out there that's not familiar with our business, we buy mining royalties all over the world on high value projects, meaning we take a percentage of the top line, the revenue interest in these mines without having to take on any of the operating risk or operating capital. And why that's so unique in this present day is we are not exposed to many of the inflationary pressures that the mining companies are facing, let alone consumers are facing. And so our ability to generate increasing revenue in a format that doesn't expose us to the cost structure and increasing input costs and inflation is really significant. So we have expanding margins in a time when you're seeing most of the world dealing with contracting margins. And, that's really the gist of, kind of the uniqueness of our business model right now.
Yeah, and I'm sure right now, in terms of you mentioned the macro kind of environment, there are are there a lot of investors in the space that are kind of looking around saying like, all right, what do we do now? Because mining is very capital intensive, and it might not be the environment where people are really want to put a lot of capital at risk. Does that make something like Vox more attractive to them?
Yeah, absolutely, Aaron. You're kind of spot on. The reality is mining is a very difficult business. It's very capital intensive. And one of the reasons why as an industry it tends to underperform is because of that capital intensity and the reality that it's very difficult to bring mines online and frankly to continue production. And so as a royalty company, not being exposed to those risks, getting the having the position that we can scale the business with very, very low capital intensity and then not be exposed to any of the inflationary pressures that eat away at margins is really significant. So we're seeing certainly a lot more investor interest these days as investors want exposure to companies and businesses that benefit from some of these inflationary pressures. Commodities have tended to do very well in cycles like this. So we present a really unique investment opportunity, I believe, because we get the benefit of what should be a rising commodity price environment without the deleterious impacts of inflation being near all-time highs.
Yeah. Someone at Hertz was asking, was this an IPO? No. So Vox recently uplisted to the NASDAQ, correct? Or NYSE?
Correct. So we recently upgraded to the Nasdaq. So we're also listed on the Toronto Venture Exchange. But as a business, we've been around for almost 10 years. So really excited that we could be on the Nasdaq and available to a much wider audience of U.S. investors. We're always built as a business to be there for U.S. generalist investors, not necessarily the mining specialists, but using our mining engineers and our geologists on the front lines of our business to pick great assets that have fantastic royalties. And so a lot of your viewers are probably familiar with hydrocarbon and oil and gas royalties. We do the same thing, essentially finding really good hard rock mining royalties all around the world with a real focus on Australia, which is probably the best mining market that there is. And then bringing in, a very, very significant portfolio of those royalties that's cash generative from now until, really as far as the eye can see.
Yeah, and so I'm looking right now. I mean, I know you guys have a wide, kind of my exposure to mines all over the world. Are there particular precious metals right now you guys are looking to add exposure in, or what are the most interesting, I guess, specific metals to you right now?
So we have 7 producing assets right now. 4 of those are gold. So we're very exposed to precious metals. That being said, we're a little bit metal agnostic, but we're looking for great mining projects that have huge expansion opportunities where when we get a royalty over that, all of that growth comes to us at no additional cost. So we're looking for long life assets that are going to generate cash flow for us in the near term and then have immense optionality based on that mine continuing to build out both resources, reserves, and production. So we're seeing that take place in our portfolio. And the key is, again, for your viewers, we're not exposed to any of those costs. The ongoing costs of pulling metal out of the ground and producing metal, we're not exposed to. The immense cost that it takes to expand production or bring a new asset online, we're insulated from all those costs. So in a market, in a world right now that's seeing costs kind of go out of control with inflation, we present the ability to get the good exposure without a lot of that drag.
So yeah, so instead of saying like, okay, we want to add exposure to copper mines and start looking around the world, you're just looking for any mine that's got good cash flow position that could be a good profitable business transaction.
Yeah, essentially. I mean, what we've done is our business was built, and again, I founded it almost 10 years ago. It was built around the premise that royalties, this is kind of an investment hack, if you will, for investors out there. Royalties, these third-party royalties, where you're generating revenue or a percentage of revenue without having to supply any of the costs to these mining operations and without many of the risks. These assets have been the best performing assets within the commodity sector over the last 10, 20 years. And so we built a business principally around that. And when you look at what's driven alpha or outperformance in the commodity sector around royalties, it's a little bit less so around what specific hard rock commodity you're generating revenue from. It's more about the quality of the asset. And is that asset going to go from, say, 1 million ounces of gold in the ground to 10 million or 20 million ounces of gold in the ground? And all of that upside then comes to the royalty holder without having to fund any of those costs to generate that upside. So that's the strength in finding assets that are going to generate current return for our business, but then also present a lot of that upside and optionality that we see for royalty businesses and royalty holders.
Yeah, and just kind of, slowing things down real quick to make sure that myself and the audience all understands, like, so the basic business transaction, like as far as the benefit for the mine. So it's like essentially you're giving money up front to the mines to then get a portion of those royalties or profits down the road.
Yeah, so Aaron, it's even better. What we focus on is finding third-party royalties. So we're buying royalties from family estates, doctors in the bush that have somehow come across a royalty for that's been in their family for generations. I mean, we bought royalties that were in the hands of private individuals that you would never even know existed, that were created in the 1930s and 1920s. We've looked at royalties going back all the way to 1902. So what we're actually doing is we're not financing mining companies, and we believe the best business in the royalty world is finding these disparate third parties all around the world that hold these royalties. We have a database. It's the largest proprietary database of third-party royalties on the planet for hard rock mining royalties, and we are able to utilize that to find all these interesting royalties, where many of the people in the industry really are kind of blind to these opportunities. So it creates really unique buying opportunities, allows us to find really good value in the royalties that we're bringing on into the portfolio, and we're seeing that take place every single day. So if you look at Vox and where we've been, we've produced 2 record quarters of revenue, increasing margins, and we see a tremendous amount of growth in the portfolio. And as I've said on the show, we're realizing this growth without having to put any money in the ground. So it's a very capital light business in a capital intensive industry. And so we get the benefits of what is a lot of optionality in the commodity sector, as many of your viewers are aware, without a lot of the drag.
Yeah, no, that's incredible. It's such an interesting business model. Someone in the chat's asking, are they similar to FNV? I believe that's Franco Nevada. Do you guys have any
you've got some pretty
peers?
educated viewers out there, Aaron. Exactly. We modeled our business on what Franco Nevada did in Nevada in the late 80s and early 90s. I mean, some of the royalties that they acquired are absolutely mind-boggling. Royalties that they bought for $1 million that have generated $1 billion in revenue back to their firm and are going to generate probably another $1 billion plus. That's what we modeled our business after. They were kind of the shining star in the industry. So 10 years ago, when I started building this business, we started finding competitive advantages. We could find, hopefully a lot of royalties like that within our portfolio and do that systematically and repeatedly. So what you see with Vox is we really focused on Australia. It's the best mining market in the world. 5 of our 7 producing assets are in Australia. And we basically did what Franco did in Nevada in the 80s and 90s. We're doing that in Western Australia. And so that's given us a huge advantage, a lot of quality assets, a lot of quality royalties, but that's ultimately underpinned by our database and our technical team of mining engineers and geologists on the front lines doing the hard work so that your viewers don't have to be geos and be mining engineers, and they get exposure to what's been the best asset class in the commodity sector for the last 20 years.
Yeah, no, it makes a lot of sense, I guess, to take part of the playbook from Franco Nevada, say, okay, what do they do? What can we do better? And then do your own thing, like you said, in kind of that new region in Australia. Are there any, not that you've thought about it from like a business perspective, or at least at Vox, but like, are there other industries outside of mining that a royalties business would make sense? I mean, I know, you see headlines like Sony will buy someone's records for $500 million. And now they own that music for life, So is that kind of similar?
They are similar, and one of the most I think famous royalties is the Listerine royalty in the U.S. I think the inventor of Listerine has made some obscene amount of money from the royalty. I think when he sold it to one of the large consumer brands, Procter & Gamble or whomever. But ultimately, yes, the reality is royalties over mining assets tend to be far more explosive in terms of their optionality, because the way that a mine typically runs, the mining company will go prove out, say, 10 years worth of reserves. So you've got high confidence that there's economic viability of this mine for 10 years. It's going to say produce 100,000 ounces a year. What happens is the mines aren't incentivized to go drill out this resource and increase it up front because it's so capital intensive. So once they get into production, then they start going out and drilling out these ore bodies. And what happens is a lot of times these ore bodies are much larger than even the mining company expected, or certainly any of the market expected. So you can get a deposit that says, we think it's 1 million ounces, that then goes to 10 million ounces or 20 million ounces. And so that's what we're looking for, is those assets that have those types of characteristics where you get that explosive optionality. along with a very, very good and growing current return. We tend to be buying assets at 0.2, 0.3, 0.4 times NPV. So discounts to NPV on assets that we ultimately think are going to be worth a multiple of where they're at today. And again, get all of that upside without contributing any of the capital to experience that upside. So yes, you're right. There's a lot of analogs out there from a royalty perspective, but I don't know that I've seen or come across a commodity that you can stream, or per se an industry that you can put royalties over, that generate the I would say the extreme optionality that mining royalties can generate for investors. And that's why it's been a very, very good performing asset class.
Yeah, no, I mean, mining is, as far as industries go, got to be one of the oldest, right? People have been digging up the earth and trying to pull stuff out for a very, very long time. So it's cool to talk to like an innovative company that's taking an old industry like mining and doing something new, doing something exciting in it. The royalties, it's mind-boggling to me, because that's a whole part of the business world that probably 99% of people go every day without thinking about, and it's what you guys at Vox Royalty are thinking about every single day.
Yeah, we're kind of royalty nerds, for better or worse. We love what we do. We've got a huge competitive advantage in it that's systematic and that we can continue to repeat. We're finding great value in this market today. So certainly the volatility helps us find really interesting deals at very good valuation. So we're excited about where our business is. We think we're a really unique opportunity for investors right now. And then obviously, as we touched on, Aaron, being listed on the NASDAQ was a nice milestone for us. It's opening us up to a much wider audience of investors. And excited to continue delivering results for our shareholders.
Yeah, and guys, the ticker's on the screen, VOXR, Kyle Floyd. Kyle, if I'm ever on, a Jeopardy or Who Wants to Be a Millionaire, and I get a question about royalties and I get to phone a friend, you're going to be the guy I call.
I'm your guy. I'll be ready. And we'll bring home that million.
Let's do it. All right. Thank you, Kyle, for hopping on Benzinga Live today. Guys, if you want more, check out Vox Royalty's website. I'll drop that link in the chat. Kyle, enjoy the rest of your Tuesday. We'll chat soon.
Thanks, Aaron. Really appreciate it.
No problem. All right, guys. That was Kyle Floyd, CEO of Vox Royalty, ticker VOXR. It's 12:15 p.m. Eastern. Let's keep things ticking. Let's do a quick checkup on the overall market. Looks like the S&P 500 still trading higher. Nice to see us able to hold these gains, knock on wood, at least through this part of the day, because a lot of these green days in 2022 have been fake outs where we've opened higher and just quickly given up those gains. So nice to see a day where we're able to hold on to that. Going across the board, Qs, wow. Tech having a strong day today, up 1.8%. That's good to see, because the other day, I think it was yesterday, the Dow Industrial Average actually closed up significantly higher than the NASDAQ, which I just thought interesting. Seeing value outperform tech like that. Let's talk about some news. It's, I guess, it's definitely market related. We probably do need to, or I don't know if we need to, but we'll talk about it for a second. So, the news this morning: Adidas canceling their partnership with Kanye West. Of course, Adidas makes the Yeezy shoes in partnership with Kanye West. Why is it important, or why are we talking about it on a stock show? Well, interestingly enough, Yeezy, actually, here, let's do this. I see Luke right here. We'll make this a chat exercise. Luke, can you guess what percent of Adidas's revenue did Yeezys make up last year? 3%. Luke is guessing 3%. All right, let's see some guesses in the chat. What percent of Adidas's total annual revenue last year came from Yeezys? How did they get an interview with Mark Zuckerberg? Who's they? Holy cow. Oh, we've got some high guesses in the chat. Risk It for the Biscuit is guessing 35%, 20%. Jay Rice is saying 8%. 10%. All right, I'll give all right. Jay, Hurt Scrambler, Richard, B9 2019. You guys are all the winners. It's about 10%. It's about 10%. Let me see. Yeezys did about $2 billion in revenue last year. If we go to Adidas's, Whoa, come on. If we go to our financials, wait, I don't know. Why are there two? Is this the Adidas we want, really? Yeah, financials. So if we go to their revenue last year, annual total revenue was about 21 billion. They did about 2 billion in revenue from Yeezys. It's probably 2. No, 10%, 2 billion. That's not nothing, right? Like for a company that did 20 billion in revenue last year and you're going to bring that down to 19, you got to make up for that somehow. Where are you going to make up for it? And you got to think too, Adidas pissed off a lot of people by not acting sooner on that. So there are probably people that I'm not saying that are going to like still boycott Adidas over, and again, probably bad context here to not give contextual information. But Yeezy or Kanye West teamed up with Adidas. They make Yeezys, the most popular, one of, if not the most popular, like sneaker in the world the past 5 years. Adidas making a boatload of money off Yeezys. Kanye West has been in the past month going on these different controversial anti-Semitic tirades. Adidas has been under pressure to drop the Kanye deal. They didn't for like 10 days when other companies did. Now they finally did. My point is that there are probably going to be people out there that aren't happy that they took that long to do so. And even though now that they do so, they're probably not going to be like going out, running out, buying Adidas. Yeah. He's the Michael Jordan of Adidas. I don't know. And I do think Adidas had some other things going for it, had been growing outside of just the Yeezys. You know, like I've definitely seen a resurgence in people wearing some like throwback Adidas stuff. But look at his stock chart. I mean, that's not like, can we compare that to Nike? Nike's doesn't look like that, does it? Oh, yeah, it kind of does. I don't know. I mean, I think if I had to own one, I think if I had to own one, I'd rather own Nike than Adidas. That sounds like a dumb business move. Yeah, I mean, I'm sure that's what was going on, was they were trying to weigh the businesses, essentially the impact on bottom line of keeping him versus not keeping him. I'm sure they did some calculations and realized, or maybe found something out along the lines of, or assumed that, okay, we're gonna bypass this revenue now, right? 2 billion a year in Yeezys, for, you know, so we don't essentially get a bunch of young people mad at us for the rest of their life, like something like that, some sort of calculation that made it figure out to where it might make sense. I mean, the bottom line is, like, people say all this stuff like go woke, go broke. First of all, I don't know of a real specific example of that. Like, I know a couple years ago after the Colin Kaepernick stuff, like people were saying about the NFL, and then NFL ratings went down during COVID. And people were like, oh, they went woke after the George Floyd protest. Like, NFL is going broke, and now the numbers are like insane for the NFL. They have they're the most successful sports league in the world. Like, I don't know. Basically, when companies, quote unquote, like go woke or do something that people don't like in terms of Twitter, they'll make their like bio, their logo, you know, rainbow or this or that for this month. And it's like, yeah, it is bullshit, because it's like, at the end of the day, they're doing it for profit reasons, for their bottom line. You know, they're not doing it for any other reason outside of that. But it's essentially the opposite of go woke, go broke. They're doing it for profit. So it's funny. It's like ironic in that sense. I don't really know. This sounds like a specific example. I'm just saying I can't think of one off the top of my head. Like, I can think of, that's the one that comes to my mind the most, is when people say go woke, go broke, they're talking about, you know, NFL, ESPN, whatever it is. I don't know of it. And honestly, you can kind of say the opposite too. Like, a lot of these, I don't know. Macy's removed Trump clothing a year ago. Stock was at 70 when they did it. I mean, yeah, but like, how much of that is from them removing, like, should we compare it to JC Penney's or like another retail stock? Like, I'm sure the is JC Penney's not a stock? What's another what's a good peer here? This is what's good about Benzinga Pro. Go to peers. Target, DG. Those aren't good peers. See more. Oh, Dillard's. Oh, Dillard's has actually been holding up. Dillard's has a what's a good yeah, I mean, I don't know. I don't know how much of Macy's is stock decline is from. The stock also just went crazy. BlackRock recently launched a new ESG fund, I think. Kohl's. Well, I mean, I think the same is true. Like, I think it's both way. Like, I don't know. And again, like, yeah, when a company like BlackRock, it's just like the idea. I think people have the idea that companies are willing to appease certain people, you know, even if it means it's worse for their bottom line, which I'm saying I don't think is true. I think it's the opposite. I think they're gonna do whatever is best for their bottom line, even if it ends up pissing off certain people. Like, I think Adidas was fully ready and willing to keep Kanye and to keep the Yeezys, and had a financial reason not to. I don't know exactly what that is, but like, that's how, like, companies are operating on, you know, what's best for their shareholders, what's best for their bottom line, not what, you know, is going to make me look good among teenagers. I don't know. How's Larry Fink doing with his China holdings? How about also BlackRock lowered something and it makes them the cheapest somehow? I don't know what that means. But yeah, same thing. Like, when companies have like ESG, like, okay, for example, take ExxonMobil or Chevron, who tout their, you know, their ESG components, their clean energy, the work they're doing, and they're not doing that, you know, to be they're doing that for their bottom line, to try to survive. You know, it's like, I don't know. There are a lot of examples of it. I don't know if there are, but again, like, I think the same can be like when, like, you could say the same about Tesla. There are probably people out there that haven't been happy with Elon over the past like 6 months or so that are now. I don't know if it's enough to like not get someone to buy a Tesla though. I really don't. Follow the money flows. Yeah. Oh, speaking of money flows, I did see this was from Carl Quintanilla on Twitter. This seems significant. I wanted to bring this up to make sure I understood it like properly with the audience, because you guys are smarter than me. Oh, holy shit. Yeah, shelter See, okay, that's what this was so frustrating about, and I've been saying this. CPI data is lagging, especially the rent indicator on CPI. You're looking at rent over a rolling period over the last 12 months. This is the National Home Price Index. In 4 months, the price growth collapsed from a 3-month growth of 25% to -4. So Carl's point is that shelter CPI data in 4 months is going to be wild, that it's going to take months for this to kind of reverberate throughout the economy, and then we're not going to see the effects of home prices, the effects that has on rent until months and months from now. Meanwhile, the Fed's making decisions about rates that are going to affect businesses today. So you're looking at lagging indicators to make decisions about inflation, which honestly in 2022 sounds pretty antiquated to me, right? There's no reason we can't have like a daily read on inflation based on the prices of what people are paying at Walmart and grocery stores and gas pumps. Like, there's no reason we can't have a real-time read on inflation. That we're not waiting for a CPI that comes out that tells us the average of rent that includes rent from 12 months ago. This was a complete sidetrack. I just happened to see it on here. And I think that's what's frustrating. That's why so many people out here right now, like, people I think aren't seeing eye to eye in a lot of sense, because someone will say something along the lines of like, inflation's starting to come down, and someone will be like, what are you talking about? Inflation's just as high as it's still going up, like all this stuff. And it's kind of, like, depending on what you're looking at, you can look at some of these leading indicators that do show signs of inflation either topping out or continuing to move lower. And then you look at CPI, some of these lagging indicators that show it being more sticky. Oh yeah, I don't know if you guys saw this. We will talk about that Apple news. Where is... Hoka is giving Nike a run for its money. Deck? Who's Deck? You can't please everyone, but why put your company out there for a few bucks more? So I think what you're seeing is companies are picking a certain demographic, right? And for people that have worked in like marketing and stuff know like the most expensive, the most valuable demographic for companies to have is a younger demographic. It just makes sense, right? Like if you can go out and spend money on commercials to capture a customer that's going to have brand loyalty for life, would you rather have that new customer be a 45-year-old that might have 30 more years to spend their money on your product, or a 25-year-old that's going to have 50 more years to ooh, Deck owns them with Uggs. Is Deck publicly traded? Oh, Deckers. So I think it's just I think that's what it is it's companies basically trying to align more with the younger base at the detriment of what to some of the older base will think about it. All right, here we go. All right. Bank of America. Over the last 3 weeks, inflows into single stocks as a percentage of the S&P 500 market cap were in the 99th percentile of history since 2008, and 2 standard deviations above the average. That means to me, what does that tell me? Well, all right, let's break this down. For single stocks, what does that mean? Over the last 3 weeks, inflows into single stocks as a percentage of S&P 500 market cap. So as opposed to inflows into various ETFs, funds, they're going into single stocks. Does that mean retail plowing into individual stocks? Does that mean institutional money going into individual stocks? I don't really know. Either way, the fact that it's 2 standard deviations above the average in the 99th percentile shows me that it's not. I don't know. I'm not saying it can't be part of a bear market rally, but that seems pretty high conviction to me. Yeah, exactly. They're in the prime marketing age range. And so when a company does like a marketing thing, like for take example the Pepsi commercial, Kendall Jenner that got like memed into oblivion because of how cringy it was. Like when you do a marketing promotion like that, especially surrounding like a, at the time like a big national controversy, like you might piss off some older people saying like, oh my god, like this company comes out and is supporting BLM. But if they do polling on it and find that 70% of people under 18 support this thing, or like 70% of people under okay, so let's just say, I'm just gonna make up stats. Ria's doing inflation is over thing again. I'm not saying inflation's over. I think we've seen a lot of signs that or a lot of indicators that show there's a strong possibility that inflation has peaked. Doesn't mean it's over. That doesn't mean inflation can't remain high. But there have been a lot of indicators that show, again, that there's not that inflation has for a fact peaked, but that there's a strong possibility that it has. I think so too. Oh dear, why is Portnoy trending? Let's see. All right, he's calling out Kanye West. Dave Portnoy is Jewish, by the way, so makes sense why he wouldn't. Who's this person? I don't know. Good for Dave. Been buying a little Yeti down here for an Xmas run. Yeah, let's go back to our Benzinga Pro. Decker's Outdoor. So someone asked what is Hoka in the chat, not Hoka. This is yeah. UGG, Teva, Sanuk. Hoka are these running shoes. They're kind of like bulky, cushiony. They're kind of ugly looking. You've probably seen them before. But runners, they have like a really niche consumer base. Like runners love them. You see a lot of like doctors and nurses and stuff wearing them. I think 'cause they got to stand on their feet all day and they've got this extra cushion, so they're really good for that. But I've been seeing these everywhere. Also, the on shoes, which we've talked about that stock before. Might need to check out that one too. I haven't checked out that on stock in a while. Of course, Swedish shoe company, big investor is Roger Federer. I see Raz over here. Raz's wife loves the on shoes too. On up to $18. I don't know. I mean, this is one of those stocks that like Sharon from HR at Benzinga liked it. You're the second person. This is funny to me that people I'm not saying that Jay Rice, you're saying this about this comment, but I saw other replies to that people are like coming out now because Portnoy's whole thing has always been that he is willing to just like speak. I honestly don't. I'm not a big Dave Portnoy fan on everything or Barstool Sports in general, but I will give credit where credit's due. I think Dave Portnoy really just speaks his mind on his own thing. Like I don't think he cares about staying in trend or in party lines and everything. Like I think most people see him as pretty conservative or leans right, but he went on like a rant after Roe v. Wade and saying how stupid he thought that was. And like he probably knows that the majority of Barstool fans are conservative and pro-life, and he was willing to go on like a pro-abortion rant, even though if it pissed off half of his base. Because that's what I'm saying is I don't think Portnoy really cares what people think. So when he posts something like that about Kanye and people are like, you know, thinking it's some gotcha, like, oh, you're just like the left now, like all this. Like, I think he's just saying what he thinks. So if it happens to piss off people on the left, it happens to piss off people on the left. I think if it happens to piss off people on the right, it happens to piss off people on the right. So again, I'm not a big Portnoy fan. That's one thing I'll give him credit for, is that I do think he speaks his mind regardless of who he's pissing off. Market goes up in 1 second and Bitcoin 100K is on again. We've had 2 Bitcoin 100K. Why don't they just medicate Kanye? Yeah, I don't know. I mean, some people are very adverse to the idea of getting help, and kind of ironic because he, well, I don't know about in his case, but I don't know. He's like super religious, right? I don't know. Jesus said something along the lines of like if you have too much pride to like not let the people around you help you, you're not going to heaven or something like that. I don't really know. I'm not a religious scholar. Coin up $6, Shelly. Let's check out. Like I said, Coinbase was interesting to me because even here's how I knew Coinbase had some good upside potential. There were days down here where Coinbase was trading where like Bitcoin would be down like significantly, like 3, 4, 5%, and Coinbase wasn't moving. That was a sign to me that it was time to start getting interested in Coinbase. How are the Chinese names doing today, by the way? Baba! Hey, Baba, hanging out. All right, look at this. Say something nice about Baba. All right, I'll say something nice about Baba. You're seeing a huge volume day on a day where the stock's not really down that much. So, like yesterday, the stock was down 12%. You see the huge bar in volume here. Typically, if you see a huge volume bar when the stock isn't moving a lot, like we're only down less than 1% right now on Alibaba, that's a sign that you have a lot of people out there trying to buy it down here. Also, a lot of people out there might be trying to sell it down here, but that the price might be starting to stabilize. I don't know. Checking out the chat. What will crash one day? Coin? I mean, the crypto, you guys got to realize the crypto, we're still, I don't know. I don't even know what crypto is going to look like in like 5-10 years. It wouldn't surprise me. You could tell me that, you know, people aren't talking about Bitcoin as much anymore. You could tell me it's everywhere, and you can, you know, everyone's paying for everything in Bitcoin. I have no clue. You sound like a perma bear, Shelly. Trade price. Yeah, I'll say that is Ted Cruz can go F himself. It's too much uncertainty with investing in a Baba, even though I like the service they provide as a customer. Yeah, I mean, with Baba as an investor, so again, it all depends on your time horizon. Honestly, I don't even know if it does depend on your time horizon with Baba, because you could be telling me you're going to hold on to the stock for 10 years. I personally would bet 100% that 10 years from now, the stock's going to be higher than $62. In fact, I would put a lot of money on that. If someone wanted to give me like 1-to-1 odds that I just get to bet that 10 years, the price for Alibaba, I mean, you've got a lot of risk baked in there too. Anything can happen with China and the government. Like Ted Cruz is saying in the chat, there's so much uncertainty that to me, it would make sense to kind of just hang out, wait, pay attention to the situation, pay attention to what's going on in China, because like I think it's hard to know exactly for a lot of different reasons. I think inherently we have a lot of very anti-China rhetoric and discourse and propaganda here in the West, where, you know, like, all right, take for example this is what pisses me off. People, we Americans so many people on like Twitter or whatever or spend all talking about China this, China that. This is why China's dangerous. This is why we're letting China win, blah, 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 blah. And like you have the people fighting about how bad China is or talking about how bad China is. Meanwhile, they're our biggest business partner in the world. We do more business on a money-wise basis than any other country in the world. That's our both the leaders of our businesses and political leaders, which you could argue, their interests are the same. They're intertwined, right? The companies are going to essentially pay for which politicians or the policies they want promoted by the politicians. They're fine with China. They're our biggest business partner. They're going to act like they're our biggest adversary and we need to, crack down on China this and China that. And granted, Biden is doing something, and it seems like there are things, IBM just came out yesterday and said it's only a matter of time before we ban exporting chips to China. But as of right now, until those things actually happen, China is still our biggest business partner. So, I don't know. I'd rather just wait and see what's going on with the situation. Is Xi going to continue kind of cracking down on? Yeah, no, 100%. And I think it should make you skittish. I think if it doesn't make you skittish, you haven't been paying attention to what's been going on the past 6 months, 12 months. I mean, look, at the end of the day, the market makers, the people, investors, Wall Street, they're not dumb. There's a reason Baba's stock has gone down from $330 to $62, and it's not because the business is in shambles. It's because there's a lot of uncertainty and risk baked into the investment, baked into the country of China right now. And what I'm saying is there's no reason not to just hang out and wait. You have people like Charlie Munger, you have people like Michael Burry who are going out there who are assessing the risk and saying, okay, it makes sense for me to take on this risk, to take on some risk and own this stock, to own some of these Chinese names. I'm just saying for me and for most people out there, that probably doesn't make sense to do so, right? It probably makes more sense to kind of just hang out, wait. If Xi wants to start playing nice with Biden and saying, hey, we don't want to see, semiconductors shipments get get banned. We want to fix this. We're going to deregulate. Then sure, then the situation can change. And we have the right as investors and traders to kind of to change our strategy on something as the situation changes. Chase seems to be consolidating power. Yeah, and that's what I'm saying is I think it's a lot in terms of discourse and I'll go ahead and say like anti-China propaganda. Like I'm sure we all saw that video over the weekend of the former leader before Xi getting like escorted out. I watched a longer video that kind of gave some more context. Like I don't know. I'm not going to speculate like too hard, but there was a video that feels like it offered like a little bit more context that if a lot of people saw the longer video, it seemed like less of a big deal than the one that we saw. Again, I'm not saying it wasn't a bad look or wasn't a big deal. Obviously it was. I mean, we saw how bad the markets reacted to it. But who knows? I'm not ready to go ahead and say, I don't know. I'm basically just saying that the China situation remains uncertain. So, Ted Cruz, I do not blame you for remaining skittish on Baba, not wanting to get in on it. I'm not in on the investment right now anymore. I might buy some more Baba at some point. Today is not that day. I will let you guys know, though. And thank you, Ted Cruz. I appreciate it. We love new viewers. Smash the like if you haven't already. Subscribe to the channel. Let's go back to the title of the show, Earnings Preview for Microsoft and Google. So Google will give us some good insights into the advertising world. Whatever Google does today, Meta will probably move off of it. We know Meta moved off of Snapchat's report last week, but Google also very much in the advertising business. I could very much. Here's the thing, and what we've been talking about with earnings. Google can come out and say, yeah, ad sales have been down, things have been slower, the economy's like weaker or whatever. And it doesn't necessarily mean the stock's going to drop 5-10%. In a normal market environment, 100%. In the market environment for 99% of from 08 to now throughout the past 12 years, if a company says anything negative in an earnings report, the stock trades down 5-10%. But if Google comes out and says some of these things, the stock's already been down 30%. Investors are going to say, yeah, we know Google this quarter wasn't supposed to be as good. That's why the stock's down so much. And so it could come out that even though it's not as good, it might be better than the low bar that was already set. A very low bar is being set. And I'm not even saying that in terms of I want to play this on the long side or I like it long, because truthfully, I really don't. I'd rather just sit back and wait. But just that, to me, on the downside, to have a big move to the downside in a name like Google or Microsoft when we're already still down more than 20, 25% in some of these names would have to be significantly worse than if it just ends up being pretty standard but on the bad side. To me, there's not enough alpha, there's not enough potential return in playing the downside in a name where the bar's already low, stock's already trading lower. People already have pretty decent insights into how these businesses are doing, right? Like, there's a lot of different data companies out there. I actually have some good data from Visual Alpha. Shout out Visual Alpha sent me. We can take a look at from some of these different companies getting ready to report earnings. It just would shock me if it is that surprising to the downside that the stock moves significantly lower. China's fentanyl flow. See, and like that's honestly kind of like I'm not saying I don't know. I honestly don't know. Maybe I guess a lot of the fentanyl that we have in the country is being produced in China. I'm not really sure, but like, I don't even know. Like, China, if we had our own opioid problem crisis. Google 120 after earnings, Henry Sanchez is saying. Ted Cruz on point. How's speaking of politics, again, I don't want to get too political, but from a market perspective, Predict It's pretty interesting. I know Shelly said she knows some people that have lost a lot of money on Predict It. But if anyone's unfamiliar, this is basically an open market for political outcomes. So how it works is it's not like Vegas, like giving odds. It's just based on the market, the buy and sell kind of free market for shares. For example, so I can bet on who do I think is going to win the Michigan governor, national. How do you say it? I don't know how to say this word. Gubernatorial. The governor election. I know that site beans and rice for me. You can bet on different political outcomes. So like even if I think Gretchen Whitmer is going to win and she's the Democrat and there's a 71% chance, you can buy, so essentially you can buy the more likely outcomes for a smaller return, or you could buy like the big underdog for a potentially really big return. Like I could buy, the Democratic governor in Arizona. Probably not going to have a great shot, right? Arizona's pretty right, but you get some outweighed returns by buying the underdog there. Just a cool little site. I don't know if anyone else has used it. I've used it a little bit. Gubernatorial. Thank you. What bets are you on? So I'll be honest. I'm not in anyone's on Predict It right now. I think there's value in because so I don't know how many Senate races are up in the air. It seems like the Georgia Senate race. Wow, I can't believe basically every other state, it seems like Republicans have been making up a lot of ground going into the elections, but in Georgia, what's his face? Warnock's actually been doing well. Pennsylvania, I think, will be really interesting. I know tonight there's the debate between Fetterman and Dr. Oz. Oz has been going up in the polls. I think there's some value in taking Fetterman here, and maybe wait till after the debate, because you can see here, like, Oz has had a lot of, really, since on August 23rd, Fetterman was trading at 75 cents a contract. So Oz has really, like, just come out of the woodworks. And what I've noticed, I'd say, in, like, elections the past 6 years, like going back to 2016, is, like, momentum's a big deal. It seems like whatever candidate has momentum going into an election has been the one that's won over the past. I've really been following more so over the last 6 years than any other. So that scares me about Fetterman here. But to me, it just seems like it seems like, in looking at polls, like some polls have Fetterman winning at like a 4 to 5 margin. Like, it seems like him at 50 cents is a good value. I could be way off. I don't know. Again, maybe it's better to wait. Oh, the Brazil one, I think that's pretty. I think, like, you buy Luis Cesaro. Is it basically like, it has the reason for people that don't know about this one? So there was an election, like, what was that, a few weeks ago, and what's his face won the election. When was that? But he didn't have enough to, like, actually win the election, so now they have to have another one. But he crushed Bolsonaro. But I think some people are scared that Bolsonaro is, like, actually gonna, like, do a coup or something. I don't really know, but I think this one is honestly free money. Again, not investment advice, but 70 cents on the dollar for the guy who, like, clearly, like, look at the how that's huge. This spread is huge. So you need to have a true majority. So you need to have 50%. So they need to have a like, special election. And I guess it really depends on Simone to bet which way she leans. Like, will most of her voters go which way or the other? But even if they all go, even if every single one goes to Bolsonaro, he doesn't have more than Lula. Then neither have that 50% that they need. Wait, how does that work? How does that make sense? I guess there's another candidate. Yeah, there are other candidates too. So I don't know. Basically, this dude needs 50% to win on the election in 5 days. Obviously, there have been polls, there have been reasons to believe that Bolsonaro is going to have a better shot. I still think it's free money. Politician in favor of Bolsonaro wreaked havoc yesterday. Explosives and guns. Yeah, Jay, 100%. I think yeah, people can also switch sides or concede. I think, like, you know, it really looked like a shoo-in. I think that the Republicans were just, it wasn't even going to be close in midterms, and it was really after the Roe v. Wade stuff that flipped. I mean, look, I'm from Missouri, like, we border Kansas. Like, I was shocked in that special vote in Kansas where they voted no against the abortion. Like, Kansas is pretty conservative, like, pretty red. Like, people cared about that. Without that, without like the Roe v. Wade stuff, like, I think, look, I still think the Republicans will probably end up taking control of the House and Senate. But without the Roe v. Wade stuff, it would have been a lot easier. I also, crime-wise, like, is it really like, is crime really up? Because I saw data that are up, but overall crime is actually down over the last, like, 2 years. All right, here we go. BBC, is America seeing a surge in violence? I honestly don't know. Like, this article literally came out 19 hours ago. I haven't read it. This could refute my point, could confirm it. I have no clue. Let's find out together. Is violent crime going up? According to incomplete data released by the FBI, violent crime fell by an estimated 1% in 2021. The other thing is the number of murders, Oh, however, the number of murders increased by more than 4%. I do think too, like if the overall trend, which it has been for years and years and years, is like kind of a steady decline in trend or in crime, the way I see it is no. So Jay, so in I learned this in one of my statistics class. So in like the 80s, when news stations found out that if it bleeds, it leads is like a quote in the journalism news world, right? Like that's why like you see school shootings and stuff get so much media coverage, because when something's tragic or when something's you know, bad, it leads. So violent crime is not a bad thing. All right, I'll disagree on that one. When news organizations started figuring that out in the 80s, that it was profitable to cover that stuff, they started covering it a lot more. As an effect, most people thought crime was rising in those years when in fact it was falling because of the media coverage. Because media coverage had been going up on crime. There was more coverage of crime. So people thought that meant there had been more crime when really crime was falling. There just happened to be more media coverage of it. I wouldn't be surprised if something similar is happening in social media where like crime is really pretty like steady. I mean, look, like if murders increased, wait, Jay Rice is saying I'm a year behind. Right. Fell, okay. I don't know. This thing came out 19 hours ago, so we'll see if it has anything about 2022. But my other point was, if it really was kind of like an outlier year in 2020, I mean, like, let's be real about the kind of, oh, here we go, Jay Rice. Look, murders in Chicago. So tick up in 2020, huge tick up from 2018, 2019. And then we've ticked lower, still higher than those 2018, 2019. I really do think, like, and I have no clue, I'm not a crime expert or anything, but like, I don't know how you can't equate some of it to COVID, to the pandemic, like being locked up. Like even like car crashes, like went higher after COVID. Like people like they went down because people weren't driving a lot, and then they hit their 15-year high car crashes in like 2022. I don't think that's because of any policy differences. I don't think that's because of anything like that. I think pandemics where we've been locked up for months and months and months might have effects, and you know, violent crimes jumping up for a year might be a part of that. I don't think there's been policies really across the board, I mean, you know, that have led to that. Personally, they have found that there were increases in murders in nearly 30 areas, including cities like Atlanta, Baltimore, New Orleans, but the total number of homicides for all 70 areas was slightly down for that period. There's similar trend identified. Yeah. Data for 2022 is incomplete, but what there is shows the murder rate decreasing. I'm not saying that even that crime like didn't increase during COVID, or that it's like not a big deal. I just don't know if it's as like drastic as some people make it out to be. Like some people act as if like we've seen some like 50% increase in murders over the past like 2 years. And I don't think that's the case. I think if anything, it's a very marginal increase in what is, at least historically, a very low crime period. Crime has been basically decreasing year over year for a while. Like, can we look at violent crime chart by year? All right. So, like, basically my point is this. We've basically been in a steady decline in violent crime since 1990. So if we got like a little tick up on this chart in here in 2020 or whatever, like I'd rather not freak out about the marginal uptick in crime and still have safety of mind, essentially knowing that hey, we're still, you know, relative to historic times in a low crime period. I don't know. I don't know why it's become kind of like I feel like it's become like a like alpha male, like wannabe alpha male type thing to do for people on Twitter and stuff to act like they're scared of cities. It makes no sense. This is my cue that it's time for me to pass things over to Money Mitch. Money Mitch, Chilean crime gangs breaking out through SoCal. Money Mitch will be starting up on Stock Market Movers. He'll be talking to someone from Raymond James at 1:45. Matt Orton, the Raymond James Investment Management Chief Market Strategist. And then at 1:15, here about 15 minutes, he'll be talking to Michael Lee, the founder of Michael Lee Strategy. So without further ado, let's go ahead and get it over. Money Mitch.